Have you seen the headlines? Greenland just killed the silver market. It sounds like a crazy movie plot, right? Geopolitics, trade wars, a tiny Arctic island, and suddenly global markets are spinning out of control. It's been one of the wildest weeks in financial history. But what really happened? Is the silver market actually dead? Or is this just another chapter in a much bigger story about risk, fear, and safe havens? Let's unpack it all. Just a few days ago, silver prices were already making news. But far from collapsing, silver has surged to record levels, hitting prices near $90 an ounce. At the same time, gold is also breaking records, crossing $4,700 an ounce. This isn't normal behavior for precious metals unless something huge is shaking investor confidence. So what triggered this sudden rush? What does Greenland have to do with it? And why are people suddenly talking about silver reaching $137? The catalyst for all this was a geopolitical flashpoint involving Greenland. In early January 2026, the U.S. president revived a controversial idea. America wants to acquire Greenland from Denmark. But this wasn't a friendly purchase proposal. It came with threats. The U.S. announced plans to impose tariffs on major European economies unless negotiations over Greenland began. We're talking 10% tariffs, potentially rising to 25%. This move sent shockwaves through global markets. Germany, France, the UK, the Netherlands, they were all targeted. Investors saw this as a direct challenge to international trade, and European leaders immediately fired back with talk of countermeasures. Fears of a transatlantic trade war exploded, stock markets dropped, and nervous money fled to safe haven assets. As a result, both gold and silver skyrocketed. Gold, the ultimate safe haven, surged to unprecedented levels. And silver, its smaller sibling, didn't just keep up, it took off. The metal hit record highs above $94 an ounce. For context, silver was already on a multi-year rally, but this geopolitical shock sent prices into overdrive. So why are people saying Greenland killed the silver market? It's a dramatic phrase, and honestly, it's being used both genuinely and sarcastically. Some investors believe the rally has gone too far, driven more by fear and speculation than by fundamentals. The idea is that if silver prices get too high, industrial consumers will cut back. See, silver isn't just an investment. It's a crucial industrial metal used in electronics, solar panels, and cars. If prices hit extreme levels like $137, it could suppress real-world demand and kill the rally by making the metal unaffordable. But that narrative oversimplifies things. This rally isn't just about fear. For one, investors have been accumulating silver for months through exchange-traded products and futures. Analysts call this a structural accumulation, meaning money is flowing into silver due to broader trends like low interest rates and concerns about fiat currency. Secondly, the physical market for silver is incredibly tight. Warehouses in London and the US have reported low inventories. When people want actual metal, not just paper contracts, it drives prices up sharply. Refineries and dealers worldwide have noted how hard it is to get enough physical silver to meet demand. This dynamic can push prices higher, even without geopolitical stress. So what about those $137 predictions? Forecasts like this are common during periods of high volatility. Some traders are just extrapolating recent gains, while others see a perfect storm of supply deficits and fear-driven investment pushing prices beyond current records. But remember, markets are unpredictable. High prices can trigger their own correction by reducing demand. And let's not forget Greenland itself. Yes, it has mineral deposits, including silver, but it would take years of investment and development before Greenland's mines could significantly impact the global silver supply. So, the current rally isn't about expecting new silver from Greenland tomorrow. It's all about investor psychology and geopolitical risk. When traders see headlines about trade wars, they rush to assets seen as stores of value. This is called a flight to quality. It's driven more by emotion than fundamentals. This is why some say the market is being killed by sentiment. It's also why prices can retreat just as quickly when fear subsides. Another key factor is industrial demand. If silver gets too expensive, industries will find cheaper alternatives. This is called industrial demand destruction, and it acts as a natural brake on prices. Major Chinese solar manufacturers have already started reducing silver in their panels due to cost pressures. This long-term trend could moderate silver's rise, even if speculative demand remains strong. So, where does this leave us? On one hand, silver prices are at historic highs, fueled by global uncertainty. On the other, fundamentals like industrial demand and mining production could act as a counterweight over time. And the Greenland situation, while dramatic, is just one chapter in a much larger story. Markets often overreact in the short term and then recalibrate. If tensions cool or economic data changes, silver could see a sharp correction. So, the idea that Greenland killed the silver market is more clickbait than reality. What's really happening is a complex interplay of risk, psychology, supply, and demand that has created one of the most fascinating commodity rallies in recent memory. Silver isn't dead. It's alive, and it's being reshaped by fear, strategy, and global economics. The question isn't whether silver is dead, but what its next chapter will look like as the world watches. Thanks for watching, and if you want to keep up with stories like this, make sure to follow and subscribe.